Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of October 28th. If this article is updated each week, so if you're ever wondering where it is on the TradeThatSwing.com website under stocks, stock market analysis, and trades, and you'll see it updated there. Each week, just going through the same process, deciding how aggressively I want to be during the week. Conditions do change during the week, obviously, so I'm looking at these every day, but you can look at what I'm looking at to get a sense of whether you want to be backing off or more aggressive during the week, depending on what you see. So we're going to go over that. Some watch lists. You can check out the best swing trading stocks watch list for October. That's just high momentum stocks. That's mainly what I'm focusing on right now. How the market indices are doing. I like to look at a few different ones just to give me a sense of overall market health. So in the top here, we have the NASDAQ, we have the NYSE Composite here, the Russell 2000, S&P 500, and the Canadian index. So each one looking at a little bit different segment of the market. So you can see overall uptrends recently. We've talked about this the past few weeks. Higher swing highs. I'm not looking back too far to the left. I'm looking at more recently, higher swing highs, higher swing lows. And we have tailed off a little bit on the NASDAQ. You can see just a barely higher swing high here, and it kind of stalled off. The NYSE Composite had really nice higher swing highs, higher swing lows, just overall uptrend. But we are coming back to that prior swing low. S&P 500 just pulling back a little bit. Overall, nice higher swing highs, higher swing lows. Russell 2000, higher swing highs, higher swing lows, but again, getting into a little bit deeper correction here, or I shouldn't say correction, just a little bit of a pullback toward that prior swing low. So overall, still an uptrend, but we are in that pullback. That's why if you follow any of my lists, I'm always buying as prices start to move back up, so that if the indices keep falling, most stocks fall with them, so we don't get triggered in on the long, or are less likely to get triggered in the long. We still may in a couple, because stocks don't always move exactly with the indices. But at this point, we're looking for the move back up if we were getting into new positions. So basically, we're unlikely to get in unless we get just kind of a blip up and then another decline. So I like that because it makes me feel a little protected. I'm not trying to pick exact bottoms, but overall conditions are good. So yeah, if stocks are setting up, I'm going to be taking some long positions. Canadian index running up, a little bit more commodity-based type index. Bitcoin, we've talked about this, the choppy trading. I liked this opportunity here, this back here. And right now, I'm just kind of waiting to see, does this pop higher from here? If you've taken any of my courses, or you may have heard me talk about my range rules. So in this situation, we are right at the top of the range. So ideally, I like to see the breakout outside, which we got, and we're just kind of holding near the top of that range. So for me to go long, we would need to start moving up. And basically, it's like I'm taking the long outside the old range. If we start dipping too much back into this, I'm not so interested in the long. I would have to wait till we move back up out of the range again. Then we get the pullback that stays outside. Then I'd maybe consider it. But so yeah, right now we basically need to move up from here in order for me to get back in. We've talked about this pattern in the gold miners. I've kept it up, this kind of 15 to 20% upside, followed by kind of 9-10% downside. And so we discussed last week this might be getting a little bit extended. We got to about 16%, and now we are at about a 6% pullback. So if this pattern were to continue, maybe a little bit more downside, then start looking for the upside, because gold's still doing really well. Let's look at the market health indicators. Just lets us know what's going on under the hood. So this is the S&P 500 index on top. Volume, not really important to me at the moment. When is it important to me? Really only at these kind of turning points. Once we start to move back up after a correction, I'm looking for higher volume coming in on a big upside day. So if that's not happening, index volume isn't going to be super important to me. This is daily percentage movement of the S&P 500. Really what I'm looking for here is just big downside days, and we have not had any in quite a while. So Why I look for that is big downside days indicate big selling coming in, higher volatility. It is more indicative of bearish market conditions. When volatility is low and we have small daily movement, that's more indicative of uptrending bull market behavior. So we are still exhibiting bull market behavior, even though we've had this little bit of a decline recently. This is the NYSE advanced decline line, advancing volume or advancing stocks minus declining stocks as a cumulative number. And it's basically just been moving up with the S&P 500. And even though it's pulled back just a tiny bit, it's above this prior ledge here. So that would be equivalent to this. And you can see the S&P just above that little ledge as well. So it's basically just confirming. What I like about this is that it'll sometimes tip us off if it has a divergence. If the S&P is moving down but it's moving up, generally the S&P follows suit. If the S&P 500 is moving up and the NYSE advanced decline line is moving down, generally the S&P 500 will follow suit as well. So right now it's just basically moving with it. It's not really giving us a lot of insight. This is up volume divided by total volume, and really what I'm looking for is extreme values. So either way up here by this black line or way down here. So this is giving us basically there's a ton of upside volume, meaning most of the volume that occurred in stocks was in stocks moving to the upside, or most of the volume that occurred in stocks were stocks moving to the downside. That'd be very small upside volume, and that would show up down if we get a reading way down here. And you can see we're just right in the middle, so nothing really important there. So it's not a smiley face or anything, it's just neutral. This is the percentage of stocks above their 50-day moving average. 55% of S&P 500 stocks are above their 50-day moving average. 51% of all U.S. stocks are above their 50-day moving average. 50-day moving average, nothing magical about it, just a very crude measure of stocks that are in uptrends or moving up. Generally much easier to make money on the long side when more stocks are moving up and above their 50-day. So right now they are above, they're kind of moving back, but we're still in positive territory. The indices are still in an uptrend, but we can see this bit of slowing going on. You know, this up wave quite a bit bigger than this recent one before we got this little drop. So maybe slowing a bit, but overall conditions still looking okay at the moment. Again, they can change, right? If it just keeps dropping, we probably won't be taking any more long trades because we won't get that move up I was talking about. And yeah, so I don't predict. I just look at what the indices are doing and then trade based on that. Main sectors to watch, pretty much technology is the only one that's kind of up near the top of all of these. Technology up near the top of the 3-month, near the 1 month, and over the last week even held up not too bad. The rest are a little bit of a mixed bag. You can see most things didn't perform well last week. And then over the last month, you know, energy is near the top, but it's near the bottom over the last 3 months. So it's a little bit of a mixed bag, but technology is the kind of one that's standing out at the moment. But you can look at which ones are performing well over decent time frames, or just run your, you don't need to look at the sectors per se. You can just run your scan. Strong stocks will be from whatever sector they're from. So what am I doing right now? Long trades on stocks. That includes potentially gold stocks that would be on that list. I'm not trading gold itself. I like trading the stocks because they move more. So those are just going to organically show up on lists if they're doing well. And Bitcoin, nice run to the top of the channel. I'm going to see how the price moves out of that consolidation we're in right now. And then, of course, there's always the option to day trade if you're looking for more daily action. And you can also passively invest. So articles on all of those if you are interested in that style of trading. Have a great trading week out there.